Is Dash in a flash crash? With this red spike down, we have a little bit reason to be cautious, but I'm not seeing anything too concerning just yet. As I've been alluding to over my past several updates, Dash has become my main indicator of sentiment for altcoins. So those are the cryptos outside of Bitcoin and Ethereum. And it's actually been one of the most bullish ever since we had our low on February 24th. This is our 15-minute view close up. And I've got quite a dazzling array of different patterns being thrown at you at the moment. We had what looked like a good clean 5-wave setup off that 24th low, which seems like an eternity ago now. We had a good 3-wave pullback, which looked like a standard second wave, and then looked like we were off to the races. But no, we got a surprise pullback that fell right through our ideal retracement point, which had left us questioning whether this is the 5 waves up or if that was an extended 5th wave. And we had pretty deep pullback earlier part of this month into March 7th, and it's looked more dire in other cryptos than in Dash. And then we suddenly had a colossal spike the next day or two. So March 7th, March 8th, March 9th. And unlike in a lot of the other altcoins in Dash, it looked convincingly like a 5-wave impulse up. You can see my blue count here, 1, 2, 3, 4, 5. And I was calling that potentially a first wave. So if nothing else, this could be a subwave 1 of a larger wave 3. And well, so far we've pulled back, but we haven't pulled back as deeply here as we have with other cryptos. This is just an absolute mess. I don't know what this is. This is clearly an A, B, C down, zigzag down, maybe a zigzag up, could have been an impulse down, impulse up, but then we pulled back again. So I'm looking at this entire thing as some kind of correction. So maybe an A, a B, and that's right, maybe a double zigzag for a C wave. We don't know. This looks like an A, B, C. This could be a 4th wave. We may have a lower low. That would give us a more classic C wave. So from here it would be a 1, 2, 3, 4, 5, something like that. Or maybe it's an A, B, 1, 2, 3, 4, 5. Anyway, you cut it. We don't want to break the low that we did hit on March 7th. And well, if this is an impulse up, we don't invalidate it until we break that low at 83.61. That would be our target resistance or support, sorry. And we have an alternate pattern too that also is starting to look a bit more, well, more credible. That's this orange pattern. It says that this is a first wave. Could be A, B, C up, which is what you'd expect in the diagonal, and A, B, C down, or maybe an A, B, C down. That would be your second wave. Move that right there. And this would be a 3rd wave, 4th wave in progress right now. And then we'd probably have a throwover for a 5th wave. If that's the case, then we would have a 5-wave leading diagonal off of our low, which is not as bearish as an ABC up, but it's not as bullish as a proper impulse. So either way, we're going to be watching out to see what happens here. We're going to take a closer look at some of the other coins. And look at Ethereum. Ethereum, while not looking as optimistic early on, this has a bit more of that feel. Maybe it's in a 1, 2, maybe another 1, 2 here. Although this really looks like a 3-wave pattern to me. Another credible pattern this could be is an A, a B, and a C. It fits the proportions, and we're starting to keel over a little bit. MACD is diverging a little bit. Maybe we have a little higher high until we break about 30.20, right around that range, 3,020 in Ethereum. That would certainly be a concern. And in Bitcoin is just looking all sorts of crazy here. I can't really discern what's going on here. We had a pullback, and I guess that's 5 up. Maybe 3 down. We didn't get a lower low. So technically this could be another 1, 2, a big spike, unspike, respike, spike down, just spikes all over the place. So a lot of volatility in whipsaw, but that is what we're seeing in the major coins. And well, that leads us to the big picture. So this is the logarithmic daily chart, which I will have a link to in the description below, but I haven't changed a darn thing. All I did was I deleted the former green pattern that was here because it was technically invalidated, because we had a lower low as compared to what we had back here in June 22nd. And that was, of course, invalidated as of January 22nd, which means that, well, we're in the purple now. The purple says that we are done with the crash. We're not going to go any lower. And I actually have these all misplaced all over the place. The red would be down here. The purple would be up here. So that says that we're about to rally. The red pattern would mean that we're going to fill out complete to that $61 mark that we're looking for. That's what that is. It could still happen if we turn around and we keel over right here. That is probably the number we'd be hitting. That would be a long way down. I'm not convinced it would go down one shot, however. So if you have a big spike down below the support, bounce, and then eventually have your 5 of impulse all the way down to the 61 mark. I don't see that as a strong possibility at the moment, but things can change at moment's notice. We're going to see what happens because we've seen quite a bounce back in equities. Although when we look at the futures markets, they've been pulling back pretty sharply overnight. So we're going to see what happens there. If we are really setting ourselves up for a rally, we've got a lot of positive signs of that. I've been pointing out this MACD divergence. You can see how we're getting less and less oversold here, less stretch to the downside, despite having lower lows over time over the past nearly year now. That's right. This peak was in May of 2021. We're in the middle of March of 2022. So this correction has been pretty dang close to a year. It's about freaking time we turn around. Similarly, in equities, I've been doing some updates comparing this to the stock market, the Dow Jones Industrial Average, same kind of thing. Not a whole year's correction, but we've been correcting for nearly 3 months there in a very complicated, ugly fourth wave. So with that being said, if we are to rally, our first subwave target still stands as it did before because we haven't had a lower low. That could hit anywhere from 212 to about, was that 392, something like that. So colossal upside just for the subwave one alone. And that is assuming that our rally off the everything crashed to March 2020 low is a first wave. We are in a second wave, and that we should expect to get in there for a subwave one. That subwave one would be the beginning of a much larger upward pattern, which I do have projections for. And of course, in Dash, we have some incredible confluences. Just because Dash has been around so long, it's one of the older cryptos. We have one of the most robust patterns, and this is why it it rises up to the top of my list on my crypto risk reward score numbers. It's hit all the targets that you'd expect us to hit with our fibs. I would reckon that our fourth wave consolidation may have been a little deeper than we'd like, but that's the nature of cryptos. We didn't break anything. Technically, we stayed above this 0.764 extension here. That would have been support. That was the 2020 crash, and we haven't gotten anywhere near there, which would be $34 in this latest crash. And so far, we're seeing everything we need to see. What I'm calling our first wave in red here, just messed that up real good. That hit the 1.32 extension almost perfectly. So very good sign that the pattern that I am calling for as a primary really is the primary pattern. So if that's a first wave, and well, I'm going to move my logo out of the way, that's subwave one. I would expect us to hit our third wave. I'm going to zoom back up just so we can get a better look at this thing. So if that is the 0.32, anywhere from the 1.0 to the 1.236 extensions would be our third wave. So in my crypto risk reward scores, we have that max gain score, the short-term max gain, the short-term gain multiplier, whatever, that is based on hitting that intermediate target. So that would be in this range. If I build a Fibonacci extension off of what we have so far, which is right here, I'm just trying to make sure I got that right. That is about where we're hitting. So again, 0.382 would be about the 211 to, what was it, 392 mark, something like that. Our third wave of the larger pattern, this larger fifth wave, would get us somewhere between 1070 and 1988 potentially. And then finally, we would expect the larger degree third wave to get us to a lot, $3,000 plus. So I don't want to get too far ahead of ourselves. There are a bunch of nested 4-5s that we're expecting to see. So, you'll have a 1, 2, you have a 3, 4, you have a fifth wave of a bigger 3 and a 4, and then eventually you'll have your final top. Looking at the timeline overall, how long these patterns have been taking, I don't see us getting to $8,000 anytime soon. It might take a year or 2, 3 years. You don't know. This thing, this whole first wave, this was basically a 1-year ordeal. We've been in this correction for about 9-10 months, something like that. So this third wave could take a lot longer than that. If I had to give an estimate, there is a very basic equivalence that we use. It's not the most accurate thing. And it is basically the Fib Time Projection. So I believe this is the right one. So if I take our length of our first wave, and actually that's not the right tool, I don't think. Basically, there's a 1.61 equivalence. Here it is. That's the one I was looking for. So if I put that there, this here, and then pull it off of and I'm going to delete the other junk I put on there. There we go. So if that is anywhere near accurate, 1.618 would put us in, I don't even know that looks like late 2023 would be the top of our bigger third wave, which again would fall somewhere between about $2,916 and $5,400. That's how long I would expect it to take for us to get to the upper target. As for that 8,000 whatever target, figure that could be a good bit longer than that. These things take longer and longer as you go. So fifth waves can go much further than the third wave, but they don't move as fast. They take a lot longer. So patience is the name of the game. Let's see what happens here. We're going to be having plenty more updates on the cryptos, including Dash. So don't forget to subscribe. That way you don't miss them. And if you enjoyed my video, don't forget to give me a like. Thank you and happy trading.